and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the day street. Right now, if you look at the Nifty, it's hovering just under 24,900 odd mark. There's a 263 point of a jump that we have. Now, of course, we have seen some pull down from the day's highest point, but at the same time, we are seeing a broad range under which the markets are really operating in. The markets have been buoyant right from the word go. This is right after the GST booster came in to improve the sentiments on the D Street, hoping big on how the GST rate cuts that are being anticipated now can actually result in a boost to the consumption overall theme, as well as lead to an overall buoyancy in the economy at large as well. And that's leading for the markets to really cheer at this point in time. If you look at the market breadth, all of the sectors, barring just slight losses on the IT sector, they are all positive in trade. It's the auto sector that's definitely zooming, driving from the front row, 4.5% higher in trade. All the stocks in the auto space are actually sharply up, ranging anywhere between low single digits to even high double digits as well. When we look at the kind of stocks that are buzzing on the Nifty, you have Maruti Suzuki that's up by nearly 9% in trade today. Hero MotoCorp follows a 6% higher move. You also have Bajaj Finance, Nestle, Bajaj Auto as among those gainers, anywhere between 5 to 9 odd percent kind of a move in the top 5 gainers on the Nifty. When we look at the laggards, you have L&T that's dragging, you have Infosys, BEL, NTPC and ITC as the stocks that are dragging in trade. Even consumer durables, for that matter, are zooming ahead. You can look at Blue Star that's topping the F&O chart right now, over 10% of move there. Amber Enterprises. You also have auto names like Maruti, Ashok Leyland also driving in as well. Let me now welcome our guest on board. Mr. G Chokkalingam joins in. He's the founder and the MD of Equinomics Research to share with us his views on the markets. Warm welcome to you, Mr. Chokkalingam, and thank you so much for taking the time out. I want to start off with this key new theme, the GST booster shot that is already pouring in some fresh sentiment boosters into the D Street, something that was lying low for the last 6 weeks odd. We had seen a complete drag on the markets, and this comes in as a fresh wave of momentum. How are you looking at these fresh announcements made by Prime Minister Narendra Modi, and what could be following suit in terms of GST rationalization in the coming months?
Yeah, certainly. It's a really timely and welcome proposal from the Prime Minister of the country. It should be seen in the background that the last budget has given a phenomenal boost to the public, the households, in terms of direct taxes. Now, Prime Minister has proposed to give a big boost in terms of indirect taxes. So, therefore, this announcement, this proposal is a really big game changer because it is coming after a big boost through direct taxes. And it is also timely because we need to strengthen the domestic economy uh, because exports account for 20% of the total economy. And to mitigate the risk coming from US and other possible consequences of trade war, we need to strengthen the domestic economy. And this would definitely help in strengthening the domestic economy. Uh, so the market is also cheering the news that Trump made some statement that the buyer of oil from Russia may not be punished. And also, we have seen last week the inflation rates coming at a record low level. Oil price also crashed in the global market by about 20% from 52-week high. So, so all these factors augur well. And as far as the GST reform is concerned, I think it would be directly related to the products consumed by the middle class. And therefore, we can see a big boost to the demand for consumption pattern of the middle class in the country. So that should help us, to retain close to 6.3, 6.5% GDP growth, despite the war being imposed on us by the US.
Right, Mr. Chokkalingam, let's talk about the key sectors that are in focus right now domestically, where we are hoping to get to see certain benefits of GST rationalization. Let's start off with the auto space at first. There's a wide expectation that the 28% GST rate could come down to 18% for a wide variety of these auto companies, and this could, of course, lead to price cuts of four-wheelers, even two-wheelers for that matter. That's seemingly lifting the sentiments, and this comes in right ahead of the festive season. So all those investors who'd been, waiting to buy their next vehicle in the upcoming festive season may have something to cheer about. Within the auto space, what is really catching your attention as an investor at this point in time?
Certainly. I mean, if this happens, it will be a big boost to auto sector because we are seeing that the entire automobile sales put together is growing in single digit. So therefore, this will be a big boost. And obviously, the first choice would be Mahindra and Mahindra because without this boost, M&M is already doing phenomenally well, and it's a unique player, and that would be a big gainer. And followed by two-wheeler stocks like Euro MotoCorp or TVS Motor. These are some of the names which could be the beneficiary. And also the tire stocks. The tire stocks are doing well despite subdued sales performance by the OEM in automobile because of the thanks to the robust replacement market. And also now the input prices have come down a lot. Both oil and natural rubber prices have come down by 20% each. So in this background, the boost to the automobile OEM sales will add more value to the tire stock. So therefore, I would suggest a tire leader like MRF. So these are my conviction, and I personally do not own any of these stocks.
Okay, got that. Let me just actually talk to you about specific stocks there. Maruti Suzuki is something that I wanted to discuss. Smart move in trade today. This is one stock that we have discussed much earlier also with you, and you have consistently, talked positively and optimistically about this stock. Now, 14,000 odd levels can actually be seen, and beyond that, this fresh wave of momentum has led the stock even higher in trade. In fact, we all know that when we compare with the world, Maruti Suzuki is the only one that actually features on the top 10 list on the world, leading OEM players, and it's at the 10th spot right now. How would you look at Maruti Suzuki, and would you still bet big at around 14,000 odd levels on the stock?
No, I would give a sell call on Maruti for simple reason that when going was tough, it was not able to beat the peers like M&M. Obviously, the whole industry will benefit, but I doubt whether Maruti is going to outperform, other companies in the passenger vehicle segment. So I would give a sell on Maruti and buy on M&M.
Okay, buy on M&M, sell on Maruti. That's the clear view there. Within the two-wheelers, how are you looking at the fresh move, and what would your top choice be there between, say, a Hero, TVS, Bajaj Auto, or maybe an Eicher?
Yeah. In my belief, being a student of economics, that tax concession should benefit more two-wheelers because that is consumed by the middle class.
Yes.
Certain segment of cars are consumed by upper middle class also. So obviously the tax benefit should be more for middle class, and two-wheeler should be a major beneficiary. So in this segment, the topmost could be TVS Motor because despite difficult situation in the automobile sector, it was doing very well, and that could be followed by some beaten down stocks like Euro MotoCorp. So these are the two stocks I think can do better when GST reforms are announced.
Okay, fair point. Let me just also go across the board beyond even auto space. Consumer durables is the next expected sector to reap the benefits of GST rationalization in the upcoming festive season. Anything within this specific sector that appeals to you? This again has been a sector which has not seen, smart moves off late over the last 1 year or so. Even in the previous festive season, we did not see much move across the board. What is appealing to you within this sector?
I'm not a bullish on this because, the kind of lumpiness you see in a car and two-wheeler is not there in the durables. If you take, basic consumer durables, the price point, the lumpiness is not very big enough. So, still they have been struggling for last 2 years. So I doubt whether the tax concessions are going to, lift in a very big way. It looks like, temporarily in the short term, the penetration of durable has, peaked out in the country to a large extent. So I don't think I may be wrong, but I don't think firmly that the reforms are going to, pull up the sales of durables very fast.
Okay, got that. Let me just quickly look at some of the other spaces then. What about FMCG? Do you see there any move kind of on in the positive trajectory to come in for this sector? Or do you believe it's also not going to be reflecting too much of the GST rate cut enthusiasm?
No, it can because the price points are very, at the bottom of the pyramid. So the tax, concession should help this sector. And also, some of the companies have seen recovery on a sequential basis as compared to March quarter. And third, the good monsoon and low inflation. So along with that, the reform also should also help. And so therefore, the FMCG sector as a whole should be the beneficiary.
Okay, fair point. Let me just also look at some of the other aspects that we can draw our attention to. Okay, let's also pull up some of the other spaces. Insurance is another one that I wanted to discuss with you. Insurance, there has been long-standing demand that the GST rates should be widely rationalized on this space because one, we are an underinsured country. Two, this is an essential and not something which is a lifestyle spending at this point in time. And to promote more and more people to go for insurance, there needs to be some tax reduction there. Finally, there is some hope that even health insurance, life insurance will see sharp reduction in the tax rates. Would it enthuse you to bet big on this space?
Certainly, yes, I completely agree with you because I am sure the government would reduce the GST on insurance. As you rightly mentioned, it is a basic necessity for the mass. So the penetration is still far below, the what we see in the developed world. So therefore, this is very much possible, and I would, vote on HDFC Life. That could be the possibly the best bet within the insurance sector.
Okay, so that's the insurance sector. Let me also come up with some other spaces. Okay, finance and banks is something that will be seeing the indirect impact when people go ahead and buy cars, two-wheelers, when they go ahead and buy consumer durables, when they see a reduction and consumption gets boosted. It's the banks and NBFCs that will bet big on the credit growth that could surge. This has been a space which has so far outperformed in the markets in the calendar year so far. Does this, give another wave of fillip to the sector to continue to outperform?
Certainly, I agree with you. It will be a great indirect beneficiary of GST reform because this year, particularly bad for banks after a gap of 3-4 years, because the credit growth has come down below 10%. Even the deposit growth is quite struggling, and banks are struggling to retain the low cost deposit ratio, that is CASA deposit ratio. And many banks are facing even the margin pressure. And lastly, the competition also increased a lot in the banking and financial space because there is a overlapping of banks and financial services companies. And on the other hand, we have seen entry of many small finance banks and small finance companies. So all put together led to some stress for many banks in FY26. And in this background, this reform, tax duty would definitely help banks. As you rightly said, there will be a boost to the demand for housing and automobile, and banks would be the major beneficiaries because they still have access to low-cost deposits. So in this space, I would strongly recommend we have a buy rating also, State Bank of India and Bank of Maharashtra. Again, I personally do not own these stocks directly or indirectly.
Sure. Okay, so those are all the key pockets, viewers, and of course we can call out even more pockets that are being seen as those that could benefit from the upcoming GST rate cuts. Meanwhile, we'll also look at the aspects or the spaces which are actually reacting downwards in an otherwise strong market. Let's talk about Suzlon, one of those retail favorite stocks that is seeing sharp reduction in the prices over the last 3 to 4 odd trading sessions. In fact, shares of Suzlon have fallen today for the fourth straight session, and this is right after having reported the earnings that the stock price have only been reducing. Let's find out from my colleague Pawan now, who's joining in to share with us what's the latest on Suzlon, what is the kind of pain that investors are facing, and what is the key reason behind this sharp downtick on Suzlon over the last 4 sessions. Pawan, take it over.
Suzlon shares have been falling and the stock nearly crashed around 6% earlier today. However, it has seen a marginal recovery, but I can see that the stock is still 3 odd percent down today. So from its 52-week highs, the stock has lost around 35% of its value. And in the since its result on August 12th, last Tuesday, the stock has it's down around 10 to 12%. So what is the key reason? The results has been the mixed bag, and the brokerage firms, they see the execution for Suzlon Energy as the key. So the execution is not so great as per the expectations, and the results, they were also not up to the mark. So the profit was down. Profit was up only by 7%. At 324 crore, despite EBITDA rising around 62% at somewhere around 600 odd crore rupees. And so what has led, and its group CFO Himanshu Modi also resigned from his position from the company, and this has been seen as a negative for this company in the near term. Brokerage firm Motilal Oswal, they have said that it will be a short-term dent for the company, because he was the key person around this, the turnaround of the company. We saw a multi-bagger return from Suzlon, and and according to Motilal Oswal, it was his face that ramped up the company and revamped the business for the company. But after the Q1 results, Motilal Oswal has cut its target price to rupees 80, but it has maintained its buy rating. JM Financial and ICICI Securities, they also have buy rating on this stock and have a target price of 78 and 76 respectively. UBS also recently initiated its coverage on Suzlon with a target price of 78 rupees. However, Nuvama has a target price of 67 rupees on this stock with a hold rating, and they believe that the execution of the order book will be the key for the company. That's all from my side, Sakshi.
All right, Pawan, thanks a lot for that update. Let's go back to our conversation with Mr. Chokkalingam. Mr. Chokkalingam, what's your view on companies like Suzlon, especially because, there is a huge retail interest in such stocks. We do know the past history of the stock where it has turned out to be a wealth destroyer, but last 1.5, 2 years turned out to be, pretty bright for the stock and for the investors who invested in it since single digits and reaped the benefits, because there was a one-way up move. Almost a 200% rally in the last 2 years is what we have seen. Again, the stock and the company is facing a lot of changes on the top management front. The earnings also came in. How are you looking at such stories?
Yeah. So there are two, three aspects to this talk. First, let us take up the management concern. Uh, I strongly believe that the market gets anxiety whenever some CEO changes for some company. One should not give too much importance. I understand. The leadership is important, no doubt about it, but there is no need to be a panic. Because these kind of companies with the market cap of 78,000 crore, it can always attract good leadership. Today you have a lot of incentives to attract talented people, particularly when market cap is already very big. The ESOPs can make a big difference. And you look back last 10, 15 years, wherever the CEOs quit and investors got panicked and stock crashed, subsequently most of the stocks have recovered and they gave even big profit, including stock like Infosys. So I would not give too much importance to this event. However, I would not give buy recommendation on Suzlon. As you rightly said, it was a wealth destroyer in 2008 to 10 period. After listing, it used to trade around 400 rupees. From all the way 400, it became single digit. Of course, it has done phenomenally well. One has to accept that stock recovered. But now the point is, the stock is trading at around 37 PE on a trailing basis. Now one has to understand the fact that there is a tremendous structural change in renewable energy. When Suzlon debuted in the stock market, hardly there were a couple of companies like Suzlon. Today, starting from big industrial houses to small companies, there are a lot of companies have jumped in this renewable theme, and this is what happened in the last 30 years in the stock market. Whenever theme gets first attracted in the stock market, and then it gets attracted in the business itself in terms of too many entry of players, margin gets killed. So therefore, I would not give 37 P to the stock. So I would, my based on my research, I would give a sell call on Suzlon.
Okay, got that. Let's look at other spaces as well. I also wanted to discuss with you the EMS play, the electronic manufacturing services plays as well. There are, a lot of stocks that are buzzing in trade today, the likes of Amber Enterprises, PG Electroplast. Specifically, when we talk about PG Electroplast, there's been a lot of weakness over the last couple of weeks. That's after the company has reduced its guidance on a growth forecast for revenues and for profits. But otherwise, before that, the stock was hovering much higher. Even today, the entire sector-wide move is leading for the stock also to move higher by almost 8%. What's your approach here? When we talk about higher valued players like Dixon and Keynes, always the valuation picture comes into question. Even if we believe the company is into the right frame of business, is doing good fundamentally, what exactly is your thought of mind when it comes to the entire sector and your choice of stocks here, sir?
Definitely, this segment has done phenomenally well, and I must admit that personally, I have missed this as an analyst to capture this successful theme. But the point is that most of them are overvalued. So investors have to keep two things in mind. Now, today we are not at the beginning of the bull run in the Indian stock market. 10 years ago we were 84 lakh crore. Now today we are almost to 445 lakh crore. We are near the peak of the bull run. The peak was around 485 lakh crore. The point I am trying to tell you, in the entire rally in the last 3-4 years, a lot of money got chucked out of deposits, savings, financial savings came into the market. As a student of economics, I am a firm believer that beyond this level to attract lakhs of crores of liquidity is going to be difficult. So when you pay very high valuation, the liquidity within the market would be found out by selling X stock and putting in Y stock rather than taking away from the bank deposit. That is what I have a feeling. That is the reason I feel some of the stocks like PG Electroplast and all, suddenly they crashed. There are many themes where suddenly you saw 30-40% fall in a matter of few weeks or few months. So what I'm trying to tell the investor is that please be aware of the fact that the liquidity is not going to come unlimited, and therefore the valuation matters a lot. And hence, I would suggest investors to look at only one thing, that you look at the PE ratio. If you are paying 100 PE, see that profit grows at least 50% off of that. So that is what we call as a PEG ratio, PE
Okay.
by profit growth. So
Okay.
I would say that if you are paying 100 PE, see that profit grows at 50. If you are giving 60 PE, profit grows minimum 30% year on year. Otherwise, be extremely cautious, because particularly in this theme, it also depends upon the contracts. You know, yes, they have done well, they will do well. I'm not saying, but the risk is also there in a contract business. So therefore, the value.
Sure. Absolutely. Let me also just bring up a few more other pockets for your, key insight. Broader markets, what's your approach right now, Mr. Chokkalingam? Mid caps, small caps, even the micro caps for that instance. So far, it's been the large caps that the markets have been betting big on. Do you think there will be still some more time before we see a fresh wave of move on the mid and small caps and micro caps? What role are they playing right now in clients' portfolios?
Yeah. So, we have written to our research analyst client that don't get panic. We have not asked the clients to generate any cash in our research strategy. I still believe US cannot antagonize India for a very long for political reasons. It will otherwise alter the global geopolitical balance definitely against US. So I believe that it is only a part of bargaining tactics. Ultimately, yeah, balance will be found. I am not saying that the US will become, so close to India and remove all the tariff, but it is not likely to be such aggressive. So till that, confidence comes, actually on the ground reality emerges, the market will be cautious. And therefore, we have suggested 40 to 50% of the equity asset allocation to the large cap, because today the DIs, become a dominant source of supporting the market as compared to the FEIs, and they would obviously, provide a lot of support to the index stocks, Sensex and Nifty. So one strategy should be to put at least 40-50% to, the index and Sensex and Nifty stocks. And second strategy, yes, balance 50 to 60%. One can put it in small and mid cap, but here focus heavily on the domestic demand driven businesses. So what we do, whenever we initiate any company or give update, we look at a net to foreign exchange earning. So we get more confidence if any company has a least foreign exchange earning, because it is not only US trade, even other trades would be in turbulent space till the trade war, gets us some clarity. So focus on purely the domestic demand driven. There are many, the land related stocks, the hotel stocks, there are many FMCG companies, housing finance companies. So like this, just name few themes. So there are many themes which cater exclusively to the domestic demand. So that should be the strategy. As usual, without losing the valuation comfort, management quality, balance sheet quality, I believe it's a great opportunity, to be in post reform. I think the market would get some boost, particularly the small and mid cap ultimately. So this should be the strategy.
Okay, fair point. Well, Mr. Chokkalingam, it's always a pleasure to host you with us, to
Thank you.
seek such wonderful insights that you always share with our viewers.
Thank
So
you.
thank you so much for your time. We hope
Thank
to
you.
see you very soon.
Thank you.
All right, viewers, let's start wrapping up the trade. It's panned out to be a wonderful Monday without any kind of blues coming in, and after a fairly long bit of time, last 6 to 7 weeks have actually seen a lot of choppiness, but today's start has actually been on a substantially positive note. You can actually see the markets even now about 240 points high in trade, even though some profit booking has definitely come in towards the end of the session. Remember, on the intraday levels, we also hit 25,000 and beyond those kind of levels in trade today. There was a lot of choppiness that came in. Of course, that good news seems to have already come in and spread cheers across the board. But the key question will remain as to whether these momentum or this momentum led by GST news can actually continue in the days to follow, and for how long. Remember, we also have another overhang, and that's of the tariff tantrum. And 27th of August, that's the date when we are clearly watching out for, when we will get to know whether there will be additional 25% tariff that will be put on India, or before that, will we have an opportunity for some kind of a breakthrough that will avoid this 25% tariff. In case that happens, we could again hope for some kind of a continuation of positive momentum. Until then, can there be continued volatility? Well, we do not rule that out for now. But definitely, the GST cheer is spreading across wide. Let's see how long, and when the final figures actually come in, when the final announcements also come in, what kind of an impact do we see across the board? A lot of sectors have already been discussed for all of your benefit. I hope this has given you enough and more clarity. 252 points higher in trade for the Nifty, 24,883. Sectors barring IT and slight losses on media, rest all of the sectors are higher. Autos driving in from the front row, consumer durables following. You also have metals, real estate also shining bright. Small caps and mid caps have also pulled up. FMCG, banks, financial services also moving up in trade. Maruti, clearly a wave of fresh move there, almost a 9% uptick. 14,090 is on the Maruti Suzuki share that you can actually see. In fact, this is an all-time high. For the stock as well, and you are seeing a strong momentum on Maruti Suzuki right after that news flow of GST has come in. Hero Moto, look at it. Today it was up by almost 5,100 odd levels can actually be seen on this one. It's seen some profit booking from those levels. Nestle, Bajaj Finance, Bajaj Auto are the other top movers there. Blue Star, Maruti, Ashok Leyland, PG Electroplast, Ashok Leyland. These are the top movers as far as the F&O action is concerned. On the downside, L&T dragged, ITC, Eternal also dragged by about 1.5%, Tech Mahindra, NTPC and Infosys. On the F&O pack, Torrent Power, Glenmark Pharma, post earnings, Suzlon, from those last 4 sessions, Pawan gave you all those details as well. Kalyan Jewellers has also been on a dragging front. 24,883 on the Nifty, higher by 252 odd points. So we end on a positive note. Let's see whether the momentum continues and what happens overnight on Wall Street tomorrow at Asian markets front as well. That will all also together be sharing with us cues for tomorrow's morning update as well. We leave you at that, but do stay tuned even beyond the market hours. Market Today and Business Today Television will continue to share with you all the news flow that you need to get updated with from the world of business and finance. So stay tuned for that.